If you have incentive stock options, then there's something called the alternative minimum tax that you really need to understand. And so it may seem big and scary, but today we're going to break down what AMT is, the reason why it even exists, why you need to think about it whenever you have ISOs, some planning opportunities, and then also the AMT credit. All right, let's get started. Before we get too far into this, it's important to understand the basics around incentive stock options and the way that they're taxed. So I did another video that talks about that. So if you haven't watched that, then I would encourage you to watch that first, then come back to this one. But more specifically around what we're talking about here with AMT, it's about exercising your options and the bargain element. So I'll do a quick explanation of what that is. If we walk through an example, kind of similar to what I did in the last video, that assume that we have been granted 1,000 ISOs and it has a $10 strike price or exercise price, then whenever you actually exercise it, then you take the difference between the price, the strike price, and the actual value of it that day that you exercise it. And so in our example, we have $50 and the strike price is $10. So then the difference between those two is $40 per share. And you multiply that by the 1,000 ISOs that we just turned into stock. And then that gives us $40,000, and that is called the bargain element. In the last video, I talked about how if you exercise here and then you wait more than a year before you sell it, then there's some tax benefits to that. But with the bargain element here, the reason why I'm pointing it out is that if you exercise in a year, but then you don't sell within that same calendar year, then this bargain element gets plugged into the alternative minimum tax calculation. So let's go through that now. So I think the best way to explain AMT and the way that it works is to first walk through real quickly of the way that your regular tax calculation works. So at a high level, you take your gross income, so you just think of that's the money that you make. And then that is, you subtract out any adjustments, so that would be things like student loan interest or HSA contributions or regular IRA contributions. And then your gross income after your adjustments gives you adjusted gross income. And then after that, you subtract out deductions, so that would either be your standard deduction, or if you itemize, then that's whenever this gets taken out. And then that number gives you your taxable income. And so with your taxable income, this is where the normal math happens, where the first bit gets taxed at 10%, then you multiply the next by 12%, and you go up the tax brackets from there. Then after you do that math, then that gives you something called your tentative tax. And then from that, you subtract out credits. So if you have kids, then that's whenever the credits get taken out. And then the final number that you get is called your total tax, and that's just how much you owe in taxes. So with this regular system, what was happening is that there were certain scenarios where people were actually making a lot of money, but were able to use this system in a way to where they actually didn't have to pay a whole lot in taxes. And so in the 60s, the government said, hey, we need to figure out a way to close these loopholes. And so what they did is they created a whole parallel tax system, and they called that the alternative minimum tax. Now let's do a real quick version of how the alternative minimum tax works. And so the way that it works is that you take this taxable income number here, and then you drop it into the top of the AMT calculation. And then they say, it's like, hey, let's add back either the standard deduction, or if you itemize, then it adds back some of it. So it'll add back like state taxes and local taxes. So that gets added back. And then you will also add these other things called adjustments and preference items. And I put a star here because what I talked about before with that ISO bargain element, then that's where this gets added here. And so that's why you can trigger AMT with your ISOs, because there's income here that isn't included in this formula at all. Once you add those back, then there's just this flat amount that you subtract out called the exemption, and then that will give you your alternative minimum taxable income. And so similar to here, you do this is where you do the math again. and you multiply it by the tax rates here, although AMT there's just 2 tax rates, and then that will give you another number for tentative tax. So then the last thing that you do is you compare your tentative tax on your regular return against your tentative tax in the AMT system, and whichever one is the higher one is the one that you're going to pay. Let's walk through this with our example. So let's say that in the regular tax system that whenever we go through this, that we get to here and then our tentative tax is $30,000. But since we exercise some ISOs and we've carried them over through the year, then that bargain element gets added here. And so we'll just say in our same example that we run through this parallel calculation, and then our tentative tax here comes out to $35,000. So whenever this happens, then you pay whichever one is the higher one. So in this scenario, you would pay the $35,000. And the way that they would do that is they would just add another $5,000 underneath the tentative tax here, and that would be there'd be a $5,000 of AMT here. So now let's talk about some of the planning opportunities with this. Well, the first one is if you know that you're going to be exercising ISOs, then you want to know what this number is going to be, because otherwise you could get really surprised by the amount of AMT that you would expect to owe, and you don't want to be caught off guard with that. So you'll probably need a tax professional or a financial professional that understands this information to be able to help you with that. But it's good to know that just so that you're not caught off guard. And then the second planning opportunity is actually there's a way that you can exercise stock options without having to pay any AMT. So let's break this down real quick. So every year you're actually doing both of these calculations. You just might not know it. But in a normal year, whenever you don't have any of these kind of special things here, then this tentative tax on your normal taxes is higher than your AMT tentative tax. And so let's just say in our example that we have $30,000 here, and then this one without any of these adjustments is $20,000. Well, what that's saying is that you can actually start exercising some amount of ISOs, and you can increase this tentative tax, but make sure that it doesn't go over this, and so that you can actually do an exercise without paying any sort of AMT. And there's one final thing that's really important, and it's called the AMT credit. And in this scenario, whenever you've exercised stock options and that it's caused you to have AMT, this amount can get used as the AMT credit. Generally, the way that the AMT credit works is that in future years, whenever you're not exercising ISOs, you're still doing these 2 calculations like I was saying, but then in the years that your regular tax is higher than your AMT, your alternative minimum tentative tax, then you can actually use some of this credit here to lower your next year's income. Now, it's not as super straightforward as just saying, okay, you can just take that $5,000 and get it all back the next year. So it's possible that it takes multiple years to get that credit back. But the nice thing is that this credit never expires, and so you're able to carry it forward indefinitely until you use it all up. All right, so that's it. So thanks for sticking with me. If you were able to get something out of this, then I feel like we can explain anything here. And so if you like what you see, then please consider subscribing to my YouTube channel or go to javawealth.com if you want more information. And then I will talk to you guys later. Thanks.